SOL ETFs, navigating the Solana ecosystem through exchange-traded funds. Solana, a high-performance blockchain protocol boasting blazing fast transaction speeds and scalable architecture, has captured the imagination of both crypto enthusiasts and traditional financial institutions. As Solana's native token, SOL, continues its ascent in the cryptocurrency market, investors are increasingly seeking avenues to gain exposure to its burgeoning ecosystem. Enter the burgeoning landscape of SOL ETFs, offering a potentially secure and familiar route for both novice and seasoned investors to participate in the Solana revolution. This article delves deep into the world of SOL ETFs, unpacking their intricacies, exploring their advantages and drawbacks, and dissecting the diverse array of products currently available. By shedding light on this dynamic investment vehicle, we aim to equip investors with the knowledge and insights necessary to navigate the evolving world of Solana ETFs and make informed decisions aligned with their risk tolerance and investment objectives. Understanding the fundamentals. What are SOL ETFs? An exchange-traded fund, ETF, is a passively managed basket of securities traded on a traditional stock exchange. SOL ETFs, therefore, track the performance of the underlying SOL token, aiming to replicate its price movements, albeit with certain fees and potential tracking errors. This enables investors to gain exposure to SOL without directly purchasing or holding the cryptocurrency itself, potentially mitigating technical hurdles and security concerns associated with personal crypto wallets. There are two primary types of SOL ETFs. 1. Physical ETFs. These directly hold the underlying SOL tokens in their portfolio, mimicking the performance of SOL as closely as possible. This approach typically offers lower tracking errors, but might expose investors to custodial risks associated with centralized storage of crypto assets. 2. Derivative-based ETFs. These ETFs do not directly hold SOL tokens, but instead track its price through financial derivatives, such as futures contracts. This approach potentially mitigates custodial risks, but might introduce additional counterparty risk and tracking errors due to basis risks inherent in derivative-based instruments. Benefits of investing in SOL ETFs. SOL ETFs offer a plethora of advantages for investors seeking exposure to the Solana ecosystem. 1. Accessibility and transparency. ETFs trade on traditional stock exchanges, offering familiarity and ease of access for investors already accustomed to this familiar platform. Additionally, ETFs provide readily available information on their holdings and investment strategies, promoting transparency and fostering informed decision-making. 2. Diversification. SOL ETFs diversify investment portfolios by introducing exposure to a rapidly growing blockchain ecosystem with applications beyond just cryptocurrency speculation. This mitigates single asset risk and offers potential for improved portfolio stability. 3. Regulatory oversight. SOL ETFs traded on regulated exchanges undergo stringent oversight and compliance requirements, potentially offering investors greater peace of mind compared to directly holding crypto assets in unregulated exchanges or personal wallets. 4. Reduced technical barriers. Investing in SOL ETFs bypasses the technical complexities associated with acquiring, storing, and securing cryptocurrencies, removing potential hurdles for investors unfamiliar with digital asset management. Challenges and considerations. Despite their numerous benefits, SOL ETFs are not without their challenges and considerations. 1. Volatility. The cryptocurrency market is notoriously volatile, and SOL is no exception. Investing in SOL ETFs exposes investors to significant price fluctuations, requiring a healthy risk tolerance and long-term investment horizon. 2. Fees. Similar to traditional ETFs, SOL ETFs incur expense ratios and potential transaction fees, which can eat into returns over time. Careful comparison of different SOL ETFs, based on their fee structures, is crucial for maximizing investment efficiency. 3. Tracking errors. As mentioned earlier, tracking errors can arise due to various factors, including the underlying ETF structure and market dynamics. These discrepancies can potentially impact returns and should be factored into investment decisions. 4. Regulatory uncertainty. The regulatory landscape surrounding cryptocurrencies remains fluid and in flux. Investors should be aware of potential regulatory changes that could impact SOL ETFs in the future. Navigating the landscape. A survey of existing SOL ETFs. Several SOL ETFs have emerged in recent months, each with its unique features and investment propositions. Here's a brief overview of some prominent offerings here. 1. Grayscale Solana Trust, GSOL. This physically backed ETF provides direct exposure to the underlying SOL token, aiming for close tracking and high transparency. GSOL is currently the largest SOL ETF by assets under management. 2. VanEck Solana ETF. SOL's This ETF also adopts a physical structure, aiming to efficiently track the performance of SOL while offering investors the liquidity and tradability of a regulated exchange. 3. X2 Solana ETF. SOXL. This leveraged ETF employs derivatives to amplify the daily returns of SOL. While offering the potential for magnified gains, SOXL also exposes investors to significantly higher losses and requires a high degree of risk tolerance. 4. Valkyrie Solana Index Fund. STOS. This actively managed ETF seeks to provide diversified exposure to the broader Solana ecosystem beyond just the SOL token. STOS invests in a curated basket of Solana-based projects with promising potential, potentially offering investors a broader perspective on the network's growth. 5. Siren Digital Share Solana ETF, DSOL. This ETF boasts a unique structure designed to mitigate custodial risk through a combination of physically holding SOL tokens and utilizing a collateralized lending protocol. DSOL targets a blended return comprised of capital appreciation and lending yield, potentially offering an alternative to solely relying on price movements. 6. Global X Solana Ecosystem ETF, SOLN. Similar to Valkyrie STOS, this ETF takes an actively managed approach, focusing on promising projects within the Solana ecosystem beyond just SOL itself. SOLN seeks to leverage global excess expertise in thematic investing to identify high-growth potential within the Solana network. 7. 21 Shares Solana Staking ETP. SOLS2. This ETP offers a unique twist, providing exposure to SOL, while also incorporating staking rewards earned from the underlying tokens. By actively staking SOL held in its portfolio, SOLS2 seeks to potentially enhance returns for investors compared to simply holding the token passively. Beyond the basics, advanced considerations for savvy investors here. While the aforementioned points provide a foundational understanding of SOL ETFs, savvy investors seeking deeper insights can explore a range of advanced considerations. 1. Investment horizon. The holding period significantly impacts the suitability of various SOL ETFs. For short-term traders, leveraged ETFs offer the potential for amplified returns, but come with high volatility and risk. Conversely, long-term investors might favor diversified or actively managed ETFs focused on the broader ecosystem's potential. 2. Fee structures. While expense ratios might seem insignificant, they can compound over time and impact overall returns. Comparing the underlying fee structures of different SOL ETFs is crucial for maximizing investment efficiency. 3. Liquidity and market depth. Consider the trading volume and bid-ask spreads of different SOL ETFs. Low liquidity can make it challenging to enter and exit positions efficiently, impacting investment flexibility. 4. Underlying methodology. Understand the specific methodology employed by each ETF to track the price of SOL. Some ETFs might utilize more complex tracking instruments with potential tracking errors, while others might prioritize transparency and simpler structures. Concluding thoughts. SOL ETFs, a gateway to the Solana galaxy. SOL ETFs have carved a niche within the burgeoning world of cryptocurrency investment, offering a familiar and potentially secure pathway for investors to participate in the dynamic Solana ecosystem. While navigating the evolving landscape requires careful consideration of market volatility, fees, and individual risk tolerance, SOL ETFs provide a valuable tool for gaining exposure to the promising world of Solana beyond directly holding the cryptocurrency itself. As the Solana ecosystem continues to mature and attract institutional interest, SOL ETFs are likely to play an increasingly prominent role in bridging the gap between traditional finance and the transformative potential of blockchain technology.